Well, Carl, thanks for joining us.
Good to be with you.
So you recently returned from a trip to Asia. Tell us about your impressions in China in particular.
Visitors to China can't help but be impressed by the sheer energy that one senses going on. It seems like a country that wants to get somewhere in a hurry. And they've been successful at that for many years, but one senses currently that they're slowing down just a little bit, especially in their manufacturing sector.
What's behind that decline in manufacturing?
China has made a lot of its economic gains by selling a lot of products to other parts of the world. And so with Europe quite slow and the United States finally beginning to get some traction, they've lost some of those markets. And while they have consumers who have earned a lot of wealth because of their success, they have yet to start spending in the same type of manner that we do here in the United States.
In the housing sector, there's concern about a bubble in China. How much of a risk is that, and what are officials doing in response?
If you speak to people on the ground in Chinese cities, they will tell you that housing is exorbitantly expensive. Prices have shot up, and that is a source of concern because it's being financed with bank lending and sometimes money outside of the financial system. Officials have tried to check that growth by creating capital gains taxes on properties, forbidding in some cases the purchase of second homes. But the main tool is one that we'd be familiar with. They're requiring banks to increase down payments so that people check themselves a little bit and don't have so much leverage in their properties.
So what's the impact of what's going on in China on global markets?
Doug, I think it's important to start with the notion that China is still going to be growing at 7%, which is far higher than you would see in other countries. So that should still be very beneficial to the countries that it trades with. But they will see their exports to China slow down as a result of their manufacturing slowing. Profits of multinational companies that are very active in China will probably be more modest. And then finally, market sentiment in world equity markets in particular is very fragile. Announcements that China might be slowing down have the potential to diminish stock prices.
Well, Carl, thanks for joining us.
Glad to be with you.
Thank you for listening. For more insights from our economic research team, visit northerntrust.com/view.